Well, we ended down almost 400 points on the Dow. We dropped as much as 527 points yesterday. Futures this morning continue to show, they're continuing to hang in the red, really, after the G20 pledge failed to ease growth concerns. Joining me now to talk more about the markets and what's likely to happen as we head into the weekend is Chris Harvey. He's an investment strategist with Weeden Co. Also joining us, of course, is John, as well as Dominic, down from the New York Stock Exchange. And Chris, you know, every time we see these huge drops in the Dow, we wonder, are we seeing another 2008 again?
No, I don't think we're seeing 2008. In 2008, we had a lot of systematic risk. Here we don't have that systematic risk. What we have is contagion from Europe. We have a situation that continues to unwind in Europe, and we have a situation where the politicians won't make those hard decisions. So until they do, we're going to continue to have some downside. But I'm not as concerned as I was in 2008 as I am today, because there's a lot less leverage in the U.S. market. CEOs have seen this coming, and we're not looking at companies as ongoing entity issues.
And perhaps because the banks are also more well-capitalized now?
Banks are more well-capitalized. They've been much more conservative. And so you're not looking at Fannie and Freddie going out of business. You look at the financials and say they're very difficult to invest in, but there is value there, and they have been fairly well managed in capital. So we're concerned about what's going on, but we don't think this is a situation that really unwinds.
Still, it is a market that's making people's heads spin right off.
Yeah.
I mean, if you watched futures this morning over the last 10, 15 minutes, we saw a turnaround because an ECB official that we don't really know that much about came out and made some comments that might be seen as modestly encouraging about the banking system. Then the euro spikes, and then the S&P futures come off their lows, so all of a sudden the story totally changes minute by minute.
Yeah, I don't have a lot of good things to say about that. There will be volatility. There'll continue to be volatility. Again, for us, it needs to get worse before it gets better. The markets are bringing the politicians in Europe to the table. Once they realize that Greek is a default and they need to address it, and the banks become recapitalized on that default, then we can make progression going forward. What we're going to continue to see is correlations go higher. We're going to see a continued amount of stress in the market, but that's part of the process. And at some point in time, we're going to have a great opportunity for the long-term investor for 3 and 5 years out. It's just going to be a bit more pain before that moment.
Hey, Chris, it's Dominic here. One of the interesting parts about what you're saying is, let's just say people do become more optimistic about the situation. Let's say traders here think it's going to get better. Where are people putting their money right now? Are you seeing clients actually going to certain sectors?
Well, they're doing many things you would expect. They're putting money into lower risk, lower beta type situations. They're also looking to stretch for yield. So some of the large cap pharma that have good yields, some of the REITs. But we're not seeing people get aggressive. If anything, we're seeing some money come off the table. And we think it's just too early to be aggressive at this point in time.
What did you mean, Chris? I think you had told us earlier that you're seeing value, or you're seeing small cap fund managers see value in the markets. What's that indicating?
Well, maybe we can just back up. One of the things that we look at is we look at different managers. We look at merger arb managers. We look at large cap managers, small cap managers, and see where the stress is and see how they're performing. So what we've seen over the last 12 months is small cap managers have been able to extract value from their market. So they've been able to outperform, especially on the quantitative side. Larger cap managers have had a more difficult time doing that. And then what we're seeing, and a canary in the coal mine for us, has been merger arb managers.
Just very quickly, redemptions. Do small cap managers get hit faster than large cap? Like if people are saying, I got to sell, is it clients in the small cap or the big cap?
No, hard to say. From what we've seen, it's more on the large cap side than the small cap side. Small cap has had tremendous performance on a relative and absolute basis over the last couple of years, better than large cap. And so people are saying, I'm having a difficult time adding value. I'm having a difficult time with large cap space, so let me take some money off the table.
But that's an indicator of stress in the markets for you, though.
It is.
Okay. All right, Chris, thank you.
Thank you.
Really appreciate you stopping by. Chris Harvey of Weeden Co.